how much of your home loan repayments actually go towards the interest and how much goes towards the principal and actually pays off the balance, right? I'm going to look at an example right now, and it's going to be an example of $800,000 for a 30-year mortgage, table home loan. Let's kind of get stuck into that. And so obviously your own results will be slightly different if your home loan is different, unless we've slipped into some kind of parallel universe where, anyway, let's just look at this. So $800,000, right? Your monthly repayments is that much. What you will find, surprisingly for some people, only $876 goes towards paying off your loan. Most of it at the start is going towards the interest. Not surprising for a lot of very cynical people that just already have an opinion on banks. But halfway through, you will find it's nearly 50-50 going each way. And near the end of the home loan term, you'll find it slips into the other way around. So most of it goes off towards the principal and a smaller amount goes off into the interest. Now, when you understand this, you will start to understand why even small extra repayments that you make has a big impact. Imagine you paid $500 extra every month. Of course, that would come straight on top of that. So actually, it will go straight off the principal, right? And one thing you will note is these amounts, the interest amounts, change based on the balance. So any principal amounts you take off the balance has an impact on the interest. So the interest starts to reduce straight away, right? So these calculations start to look a lot better, and hence you get a pretty decent term reduction by making even small, minute changes. Now, what if you don't want to commit to an extra repayment? Most of you that have been watching me will probably know the answer to this. That is why we use flexible products like revolving and offset to kind of take small bite-sized chunks of your mortgage and try and smash it out, right? So what you would do is smash that out and then wait till this. Hopefully, if you've kind of got it the right amount or timed it right, then you will have the fixed rate coming up, and we can move some more over to this tranche from the main bucket there. Now, key thing to remember, there's some confusion on this. Key thing to remember is that what you will find is that it doesn't matter if the volume of water sits here or here, right? It's still the total volume is the same. So obviously, like trying to pay this fast and then also trying to make extra payments here might feel good for some people psychologically, but it doesn't really do anything special. Also, of course, for those of you that use revolving credit limits, there's an added benefit in that if you need to, you can go back up to the limit in case of emergency. So you're making extra payments, you need some money back, you can do that safely with a revolving credit. Now, offset home loans are also interesting. They kind of do something very similar. I guess there is a lot of ways to go about it. Some people some people don't like the temptation of a revolving credit limit, so they just set a higher repayment into the main fixed rate home loans, and they still achieve good results that way. However, there are some risks, obviously, with that, in that what if you have an emergency and you would like all those extra repayments back? Not all banks let you just access all the extra repayments you've ever made to a fixed rate home loan. You actually would then have to fill out a full application form, and that kind of sucks sometimes, because when you need money, that's kind of the time when lenders don't really look at you favorably a lot of the time. So anyway, hopefully that has been insightful for you. Thank you for watching. Hamish at monline.co.nz. We're financial advisors. Feel free to get in touch if you would like some kind of tailor-made plan for whatever you're doing.